Swing Trader Stacks here. We're going to jump into our watch list for Friday, November 7th, 2025. As always, we'll start with some market breadth. We'll take a quick but sort of deep look here at market breadth. We'll start with the SPY, and we're beginning to get some cracks, guys. Nothing too major has happened yet, but we are beginning to breach levels that we don't want to see. Although we've not made a lower low just yet. I would call this recent isolated low on the SPY here from October 22nd at about, we'll call it 663 as a line in the sand on the daily. But if we look at the weekly, I think we do still have a little bit more room before we need to get overly concerned. I would call the isolated low or the recent swing low 653 area. Busting down through that would be a change of character on the weekly. The daily, though, is the first step in a move towards that, and this is not looking great. Okay, we were discussing how maybe after the breakout we got to pull back to prior all-time high level, reacting off of it and getting back over the short-term moving average would be very bullish. And yesterday's session, we cracked down through it and had a pretty nasty close there. So to invalidate the look of this chart, which is beginning to be slightly bearish, we need to very quickly get back over that prior all-time high and back over the short-term moving average, invalidating this breakdown of the daily chart. And then we also, as I said, we should keep an eye here on the weekly and watch our levels, that being the 663, 653 are the two next key levels that I'll be watching. RSP continuing to look slightly nasty here. This does look pretty toppy, so we're going to want to invalidate this pretty quickly again and get back up over the prior all-time high, which is this green level. Things we're just going to have to wait and see if they play out. IWM also not looking great. Pretty toppy look here on IWM. Breaking that recent low here and closing below it is not a great look for risk on or small cap. I think there's certainly some worrisome charts out there, guys. And you've got the Qs breaking down as well. Guys, we need to see some reversals and validations of this, but I'm simply not willing to trust anything at the moment. I'm not going to be overly aggressive short yet, though I'm beginning to build some trade ideas around the short thesis, which I'll share with you here today. But look, guys, we're in some chop and slop right now, and I don't believe as a swing trader the edge is with us currently, right? It's sometimes you just need to know when to sit on your hands. I've not taken a trade since that NVIDIA trade. As we broke out, last week or a week and a half ago, I've not taken a trade since then. I'm just sitting on my hands, and until we have an edge, I'll continue to do so. If we invalidate and quickly get back over the 9, I'm going to need to see some things to really trust that move. One thing being the breadth signals to reverse here. We're spending too much time for my comfort below the 0 line on the high-low index, and the stocks above or below their 50-day and 200-day moving average. It's not looking good, guys. This is certainly some negative divergence as we were going up, and this has been coming down, and we're just spending a lot of time below the midway point here on that. And then if you look at our market internals, they're still telling a bit of a mixed story. Nothing too worrisome here, I would say, but no clarity, guys. Like we're up, we're down, we're up, we're down, we're sideways, right? It's a very indecisive market, and I would argue the point of having an edge right now. I don't believe you have an edge swing trading, even positioning, like long-term think. This isn't the market you want to be over trading, guys. Okay, don't get freaking chopped up and ruin the last 6 months of work in a market that just lacks any sort of follow through either direction. Okay, let's get some clarity. So to build out some scenarios, as we do like to do, let's do a new line in the sand here on this isolated low. That is a number we want to stay above, 663, aligning right there with the 50. So a scenario I could see would be a bounce off of that and a curl back up. But guys, here's what we don't want to see, a lower high, okay? So that is why I'm not willing to just jump into the market if we do get a bounce off this level. Even if we do break up through it, there's a lot of room that we could make a lower high, and there's just a lot of negativity out there. Some things seem to be cracking. Consumer-sided, this government shutdown seems to be catching up. Semis are catching some heat. Some major parts of the market, XLC, communications, we'll just look at it here. Very, very bearish look here on XLC. Meta is dragging this down quite a bit, but guys, this is not a great look. Okay, so we just want to be cautious and wait for some clarity. As I said, I'm just not really looking to do too much at all right now. I'm not trusting anything to the upside, maybe even until we clear highs, guys, there's a lot of work that has to be done. We probably need a pretty major catalyst for that to happen. I'm sort of looking at, I mean, you could see this shape that we're creating here. It's looking a little bit like possibly a head and shoulders might play out here. So there's a couple scenarios there, even if we do get a bounce, that I'll be watching for. And the other would be that we just, very quickly get nastier, right? And something like that, I'd be willing to short this move right there. Okay, a pop back up into that level that fails and rolls back over. I would be willing to short that. So I do have a few names that look slightly attractive. We'll fly through these guys because, this is, I said it in chat yesterday, when I have an edge in the market or when things are really going to be a high probability of working for us, I should be nearly overwhelmed by options. And yesterday, I didn't do a watch list, and I hung out with my family and watched a movie last night. I felt like I was forcing it. I had three names that I was like, this could work. I shouldn't feel that way. It shouldn't be this could work. Okay, you're forcing it, right? You don't have an edge in this market right now, I would argue. But, for things that look okay, if we do get a catalyst and a sharp move higher, Shoplet's good back over the 9. This is, kind of pulling right back into structure, prior all-time high. If we get a reaction off the 50 back over the 9, that could be worth watching there. Dave is something I do like coming off of its earnings report. I think this guy wants to squeeze, but it's battling the market, guys. So, maybe worth watching if we get a sharp move, but I don't think I'll be trading this guy before clearing that range all the way up here, which would take a significant move in the market, in my opinion. Cyber does look good, but again, just battling that market, but you get a retracement reaction at around our level. Rebound of the 9 on Cyber, it has a good look to it. I also really like net. It's unfortunate because this is one of my bread and butter setups. This is a shake and go with a triple R trigger. I would love to play this right now. I'm not sure that I can, guys, but you get a breakout, fake out, shake out, pull right back into structure, which it held, and back over the 9 in that prior all-time high. Man, oh man, is that attractive. But, guys, if you're going to force something and you take this, just control your size. Okay, risk management is still priority number 1, and I would say we're risk profile C. So, quarter to half size at max positions, 1 or 2 at a time. Don't go crazy, guys. We're not in a follow through trend. We're not in a trend, period. And we're not in a follow through environment. Okay. So, maybe consider cutting winners a little sooner than maybe you would. I don't love the feel of the current market. I'm not going to force anything, but if I were to take a trade, guys in Bootcamp, guys in chat, if you're looking for something, I would implore you to not treat the market as a video game and feel the need to come press buttons every day. Okay, that's not what this is. But if you gotta do something, maybe paper trade. Practice. If you've not taken a shake and go setup with me yet, practice paper trade this. If it is to trigger back over prior all-time highs, would be my trigger here. Yesterday's high is the same level. I really do like it, but I don't like how the market feels. So that's it. I mean, if I were to do it in triple R's for today, that's really all I find attractive. And then what I want to talk about is planning for that alternate scenario, as I said here on the SPY. If things continue to get nasty to the downside, okay, everything I teach you guys, Bootcamp, I'm speaking to you specifically, but guys, if you've been hanging out, if you're in the shadows on the channel, you know what I do. I trade the leaders in a trend back by growing fundamentals. And if I can identify a stock in the trend, then I just wait for them to retrace, react, and remount. All of that works to the downside as well. If we get a confirmed change of character, change of structure in the market, and things are going to be bearish for, the foreseeable future, then we can do everything the exact same to the downside. If it bothers you to look at it, then invert your chart. But some things that I'm looking at here, semis, and I know that sounds crazy, but yeah, not loving some of the headlines coming out of the space. You got Michael Burry shorting it. I don't really give a shit about that. Okay, but some of the stuff with the China, if Nvidia is going to pull back, the entire space will pull back. I mean, it's pretty much that simple. So we'll keep an eye on Nvidia. If we're going to see a little bit more of a pullback from it, then I expect some of the sympathy plays or the smaller semi stocks aren't so proven or as necessary as Nvidia is. I expect some of them to get hit pretty hard. So Oust is one that I'm looking at here, and right. So obvious change of character here. So what you want to look for, if we confirm that we're going to get some bleed in the market and we want to look for trades to the downside. So we've got our change in character, right? That's what just happened. We just busted through, made new lower lows. So we want to wait for this. I'll do it for you inverted first. Okay, so imagine this is a breakout. What would we want to wait for? Well, we would let it break out, pull back, retest our level, okay, and then react off of it. So it would be a retracement, reaction, remount. Okay, maybe by that time the 9 is all the way up here. So I know that's a little bit of a sloppy drawing, but it's a triple R trigger to the downside. When we get a little closer, I can make that look much better for you guys to visualize. But basically, all I want to see here, if we get more downside pressure out of the market, then when this thing does push back up and then fail, okay, we want to short that move. All right, so we'll keep an eye for something like that to happen. AMSC is another one that we're looking at, but this is more so a peg play to the downside. So peg play is a power earnings gap. We play to the upside, works to the downside as well, guys. So major gap down here, right into the 200. So we'll see if we get a reaction. I don't expect this. You know, sometimes I look for a gap down reversal, but not interested in that here at all. What I'm looking for here is maybe a little bit of a pop up and then for it to roll. And then what we'll do is let's go ahead and pull up our peg play watch list and visualize this here for you guys. So if we're going to do AMSC, all right, so we got downside. And as you guys know, I use a fixed range volume profile. We can't really see it yet. Let's do CVNA. This might be a better example. All right, so here is a gap down on earnings, right? So you would put in your fixed range volume profile, starting on the gap down day, move it over, and then you have your point of control, and then you have the anchored VWAP starting on the gap down day as well. And you can see so typically we do this stuff to the upside. So one more time, I'll invert the chart so you guys can see what it looks like, right? That's a beautiful, ignore the rest of the chart, but a beautiful peg play on earnings right there, right? A gap up on big volume, and you get price above the point of control and anchored VWAP. But let's undo this inverted scale. It's the same thing to the downside, guys. And you could see where this triggered yesterday, getting below the point of control and below a down sloping, because we're going downside, anchored VWAP, right? So that's something we want to start to watch for on AMSC, right? We'll go ahead and put in our fixed range volume profile. This will begin to go sideways. And what we'll look for here is for price action to maybe push up just a little bit, okay? And something like that. But when it breaks down, if we have that black dotted line in there and then we have an anchored VWAP, something like that, and price gets below both, I know these look like squiggly lines, they are, but you know, that's what we need to be looking for here on AMSC. So guys, we're looking for a little bit of a pop and then a rollover that we can short to breach this level and maybe see some significant downside here in AMSC. And then I want to also float the same idea for you guys in Quantum, QBTS. This looks a little more clean here, right? So like understandable of what we're doing. I don't need to draw so many lines, but we got a lower low, lower high, and we're looking for a lower low again. You don't have to force this one. You could anticipate a break of the 50, just as we do to the upside, okay? But I'm okay, because if we're going to get into a nasty long-term, multi-week, multi-month bear market, then you know this has got plenty of downside to go, okay? So we don't have to catch it here, but the next one would be very attractive to me, especially by that time if the 9 was below the 50 and we break down, pull back up into the 50, and then boom, we would want to short that move right there for recent or new lows, okay? So keep an eye on that, and it goes for the whole sector. INQ, they all look similar. I mean, you could anticipate this breakdown, but why do that? Just wait for the next setup, in my opinion. And then RGTI, same look here, guys. So maybe let it break, and then the next time it pulls up into structure and rolls, we can short that move. And then same thing for OCLO, nuclear, OCLO and SMR. Same looks here, guys. This guy's breaking down now, so we'll want to catch the next pop up into structure that rolls, okay, and we'll short that move. We'll just have to talk through it and see, but we do have earnings coming up, so keep an eye on that, maybe wait. But SMR is one that has a similar look here, breaking down right at the 200. If this guy gets below the 200, I expect a multi-week to multi-month move down, guys. We don't have to catch the first move, but have these things on your radar, because if we move into a market that is, we're favoring downside price action, then I'm thinking nuclear, Quantum, and then the third is going to have to be consumer stocks. So you've got CMG looking nasty. Just there's a peg play to the downside here. We'll take a look at that over here for CMG, and we'll put in our fixed range volume profile. Boom, boom. And we will put in our anchored VWAP, and you can see the trade there. That also triggered yesterday. But as you can see, we want price below the point of control, which is this black dotted line, and a down sloping anchored VWAP. It triggered yesterday. Fantastic entry on it. So we'll keep an eye on that for continuations. If you miss a peg play, that's okay. You know, this is a major breakdown and change of characters. So now we're just going to do continuations. So as this price action continues down, we're in a downtrend. So you can short these moves here as it pulls back up above the 9 as this continues to curl, right? Let price get above the 9 and then you short it back through, okay? Same exact thing we've been talking about for months here, but to the downside if the market gets nasty. Dash is another one that we want to look at in the consumer space. Really big breakdown here. You can keep an eye on it for downside peg play to start, okay? If you're not comfortable playing that, then wait for it to get moving and the first pullback above the 9, short it as it comes back down through. Elf, another one to keep on our list, and Starbucks. This one is actually quite attractive right where it is, guys. This is exactly what I want to show you. So take a look at this. This isn't an obvious downtrend, and it's retesting this support level. If it breaks it, it should have a pretty sharp move to the downside. So that's really the bet here. But we're not just betting, right? We're doing it within structure. So real quick, I'll invert it for you one more time. This is what we're looking at. I mean, how attractive would that be if we were trading it to the upside? Loading up for a rounding bottom base breakout? Okay, well, that's not what's happening, okay? Remember, the chart is inverted, but this is what it looks like, guys. When we're trading triple R's to the downside, it's the same thing, okay? You got a trending company. I'll have to, if we do go into a bear market, I'll have to stop saying we have a strong company and a trend backed by growing fundamentals. I'll change it up somehow, but we're in a trend respecting structure. And I like to find ones that are leading the move, right? Like not about to happen. This has been in a downtrend for a while. Okay, so this could be considered a leader to the downside. Look at Starbucks. It's like not following the market. Where the market's all the way up here, Starbucks has been struggling. All it is the same move, right? So we're going downside. So you let it pull back into structure, retracement, reaction, remount. Okay, so right there is your trigger day. And there's an easy 2-to-1 there, and then a retracement, reaction, remount. Another easy 2-to-1. We're getting a retracement, a reaction back through yesterday's low. Could be a trigger here for you on Starbucks to the downside. And I would probably target a break of this double bottom right here and maybe even something all the way down here. So to show you that visually, I think if you're going to get into this, you know, this is the trade. Something like this, which is a good 3.5 to 1. We've got plenty of times before the next earnings. I think that's the trade there on Starbucks, and I don't hate it at all. Shorting can be very difficult, okay? So you need to really control your size, control your risk, or wait for true confirmation in the market. I would say the market has a chance, okay, to shrug all of this off as a normal pullback and normal price action. Okay, so you're being a little preemptive, and you should know that if you're going to go in short on this market, you know, we don't have confirmation. Okay, we're getting a breakdown. We're getting a pullback. Frankly, I apologize. We're getting a pullback. Okay. So we do need something to pop back up and make another lower high and then really roll and break some of these structural levels. If that happens, yeah, guys, I mean, we got to start taking some shorts at that point. But look, don't force anything, guys. We don't have the edge in this market right now. Let's wait for an edge. An edge to the downside would be waiting for this move, and an edge to the upside, I think, is waiting to clear all the way up through highs with a catalyst and with sector rotation. Okay, there is just a lot of sectors out there that aren't looking great. We've got energy mid-range. We've got China still mid-range. We've got home builders. Yeah, it better hold that 200. We've got healthcare is actually a bright spot. And look at this volume coming in too. Healthcare has been looking decent the last week or two, obviously, right? Just holding structure, making a higher low and pushing up. If we can get moving there on healthcare, that would be a good look. And then we know biotech has been strong. Financials just can't even get back up into range. We really need this guy to participate in a move or rally higher. Okay, the market's just not going to sustain a move higher without financials being a part of it. Okay, but this could change today. But I want this guy up over the 50 for sure, right? I'm not going to let it come into here and say, here, we're saved and just let it roll over again. No thanks, man. I want this guy up over the 50 and moving towards top of range to trust any move. And financials, industrials, just not looking great. Okay. Utilities not looking great either, but it's really just pulling back. So not a major concern, just pulling back to the 50. A reaction off of it and a remount of the 9 would be a triple R trigger in utilities. And we would want to roll that into some of the stocks if that did happen. Okay. If we get upside price action or trust in the market, utilities is an area to keep your eye on. Staples, I mean, come on, dude. This is a full-on breakdown in consumer staples. Just real estate, can't trust it. Materials, can't trust it. RSP looking like it's going to fall off a cliff. Communications looking like it's going to fall off a cliff. And this is a major sector in the market, okay? Some really big names in this one. Tech, not looking great, rolling over. But I would say this is possibility of this just being a pullback here in tech. If we can get this move to reverse and invalidate and quickly get back over the 9 EMA, then that would be a great look for tech. If tech goes, the market should follow, at least to an extent. We've got consumer discretionary. As we said, I've got some worries in discretionary stocks. All right. The consumer seems to maybe be out of money in the States. Okay. Bots, even that's rolling over as well, but really all it is a pullback. We've not truly broken structure here yet in bots, so a reaction off of this level would be a good look for that sector. Retail, nasty look. And then we've got our ARK Innovations. Speculation ETF is what I call it. Breaking the 50, guys. So look, we need reactions. We need reactions in a lot of the market, okay? Or we're just going to have to pump the brakes or change the tune, at least for now, to downside price action and pull the trigger on some of these shorts. So guys, don't force anything. All right. It's Bootcamp. If you want to talk to me more about shorting, I know we've not done it as a group yet. We've been in such a ripper in the market for months now, but if you want to discuss anything along those lines, I know some of you, it's a little foreign to you making money as things go down, but I do want you to understand it's still structural. Okay. Everything is the exact same, but do be sure that we get that confirmation out of the market before you go heavy on anything. But all right, guys, that's it for today. Stay safe, manage your risks. Let's go make some money. I'll see you soon.